This is Divakar. Welcome to my podcast, Bulls and Bear Bulletin. We'll continue with the topic fundamentals of stock market, where we all agreed on the last episode that stock market is the best place to invest. So in today's episode, we will briefly discuss on what is stock market before we go on how to invest in stock market. I will give an example. Suppose you want to start business with your friend. Two of you will decide to put 10 lakhs where 5 lakhs each will be your capital, and that makes you 50% shareholding. And after some time, when the business grows, you guys will decide to expand, and that time the expansion requirement would be say about 100 crores. You will plan in a similar way how you friends initially put the capital. Similarly, you will feel by raising or by making 1,000 people invest 10 lakhs each, you can raise 100 crores. In percentage, though it looks only 0.1%, making 1,000 people invest 10 lakhs would be little impractical. So that is where what big companies do is they go to public and release shares in a extremely tiny part. The same 100 crores can be raised if you are making the face value of each share just 1 rupee. You require 100 crore people to invest on your company. Or if you make that face value of the share just 10 rupees per share, you will require 10 crore people to invest on your company. Assuming each person will buy only one share. In practical, of course, we all know up to your capability, you can raise your investment, that is so you can buy 10 shares or 50 shares or 100 shares. What I'm trying to tell you here is the whole system works very comfortably. The people could raise 100 crore capital also. At the same time, the process makes it simple because the shares were issued in very tiny parts. Friends, let's go to the initial public offer or how the company raises capital initially. After the IPO process is completed, once the company raises capital, what happens next? What happens to the people who buy shares? That is where the stock market story begins. Once the shares are purchased, on an everyday basis, the company's performance is monitored. If the company is performing well, the person who has purchased the shares will think he can sell the shares at a profit price. So, the place these transactions are done is called stock exchange. On one side, people make offer, on the other side, people do the bidding. So every day, based on the company's performance, the price fluctuates. The most important factor which people see on a company profile is the earnings. Of course, there are a lot of other factors also which we'll discuss in future. But for time being, you came to know how these shares are valued on a daily basis. Now, there has to be a method where all these transactions are monitored and controlled, right? And that is where SEBI comes, Stock Exchange Board of India, which is the regulator which controls totally all these IPOs or everyday transactions at stock market. A whole process, you can say, is controlled by the SEBI. There are other important boards in this process, such as the clearinghouse, where because the transactions are huge, you need another department which takes care of the shares listing and other things, which is called the clearinghouse, and also depository, where actually shares are safely kept. As I mentioned earlier, there is a place where all these transactions happen, which is called the stock exchange. In India, there are two major stock exchanges. One is Bombay Stock Exchange, the nickname which we all know is Sensex, and also the other one is National Stock Exchange, and the most popular index name is Nifty 50, which we all know. Friends, why there are two exchanges and where to invest, all this information which we will discuss in our future episodes. Now we'll come to how to invest on stock market. The first thing which you require for buying a share is a demat account. A demat account is similar to your regular bank account. You need to open giving all your regular Aadhaar, PAN card, and other documents. Once that is opened, generally these are managed by brokers such as Zerodha, Upstock, Angel Broking, ICICI Securities, Motilal Oswal, 5 Paisa, like that. There are plenty of popular brokers in the market. You can choose any one of them. There will be very small fees to open the account, which will be in turn connected to your SB account from the bank. So once you transfer the funds from the bank to this demat account, through demat account you can start buying and selling shares. It's very easy to operate. Either you can use the web-based platform or a mobile app from your phone. Friends, we will discuss in detail in the coming up episodes on how to pick up a stock. Until that, thank you very much for listening to me. Please give me your feedback and also kindly press the like button and subscribe to this channel. Until next time, take care. Bye bye.